Okay. All right. So this is recorded now. So
Okay.
entry, right? All right. So entry, according to the Wyckoff rules, based on three. Okay, let me share you with the whiteboard. Okay, so entry here, right? Entry will consist of three things. Okay, number one is mm, reference point. Okay, the reference point can be support, resistance. Okay, moving average, 20 period EMA. Okay, and then we have trend lines. Okay, so these are the reference points. Do you understand?
Okay.
All right. Okay, support, resistance, moving averages, P20, trend lines. These are the, okay. The second point is that it should have sign of strength or immediate SOS or SOW. Okay, SOS means sign of strength. Okay, SOW means sign of weakness. Got it? So what are the sign of strength and sign of weakness? I tell you, SOS maybe sign of strength is equals to spring. Okay, test of spring, hidden spring, key reversal. Okay, and then we have effort versus no result, EVNR. Okay, and then we have no demand. Okay,
All right.
sorry, it should be no supply. Okay, sign of weakness would be opposite, upthrust, UTAD. Got it? Test of UTAD. Okay, hidden UT, hidden upthrust, and then we have top reversal. Okay, top reversal is same as, is just the opposite of key reversal. Got it? EV. Got it?
All right.
EVNR, and the last one is no demand. Got it? Very, very similar. SOS, immediate sign of stress. Okay, and then the third point is entry should be taken on 3 minutes time frame. Okay, stop loss should be placed on previous structure high or low. Okay, previous structure high or low. For example, if it is a buy trade, then you will place your stop loss. Okay, I will write it down. For buy trade, okay, SL will be placed. You know what is SL, right? SL means stop loss. SL will be placed on previous structural low. Got it? For sell trade, SL will be placed on previous structural high. Okay. previous structural high or low. Okay, and the third point would be, and take profit will be placed on five minutes time frame. Why? Why would we place on 5 minutes time frame? Why stop loss is placed on 3 minutes time frame, but take profit is placed on 5 minute time frame? To get maximum reward to risk ratio. Got it? This is
Okay.
the point. Okay.
I
So
see. Okay.
these are the points here. And so if you, so these are fine. So first of all is the reference point. Okay. And then the second point is the type of SOS or SOW. It can be spring, test of spring, hidden spring, key reversal, EV, NR, NS. For SOW, it can be upthrust after distribution, test of upthrust after distribution, hidden test, hidden upthrust, top reversal, EV, NR, and no demand. Okay. Got it?
Okay. Yep.
Okay. So let me show you on the screen now. What was the first point? Reference point. For example, if this is a reference point here you can see that this is, if we draw the structure here, okay, I will not go down, but I can draw the structure very easily from here. Okay, let's suppose this is the market. So on a 5 minute time frame, if we will get the same thing. Okay. All right. So this is what? Can you tell me? Buying climax plus overbought, right?
Yeah.
Okay. And you can see the volume, a huge volume over here. Got it? All right. And now what do we have here? We draw the straight line from here, right? So this one would be immediate here. What is this?
AR.
Automatic reaction. Automatic reaction. We draw another line here. Now we got the structure here. And as we go up here, what is this? Secondary test, right? Okay. How about this one? What is this? FTI, falling through ice, right? Now we have two structure. What are the structural lines? What are the reference point? The first reference point here is this one. If you just notice, this one is the first reference point. Okay, so I will write down here. First reference point. Right? And this one, sorry, this one is reference point 1. Okay. This one is reference point 2. Right? Do you understand? Right? Okay.
Yes.
Okay, so we have two reference points. So this is a support line, this is a line of resistance, and this is support, right? So this is basically ice. We call this as ice, right? This line is ice. Let me delete it. Reference point is equals to ice. All right. And how about reference point 2? Supply line, right? This is supply line, because here once the price reaches here, the supply will come. Okay. Now we can either, once the trades enter here, okay, this is yes. Do you think we can enter a trade right over here? It is effort versus no result right over this reference point, right?
Yeah.
Okay, but the point is, now here we need to wait for the upthrust, right? Secondary test, we don't usually enter at this upthrust. We either enter at the we either enter on the upthrust, or after upthrust there is a second one. Okay, so we either enter on UT or UTAD, or what do we say, FTI. Okay, RBI, rally back to ice after so that should be rally back to ice after FTI. Okay, got it?
Yeah.
So sorry, RBI, rally back to ice after FTI, followed by UT or UTAD. Got it? These are our entry points. I will explain you what do I mean. Now, the thing is, why do we not enter here? What's the reason here? I will tell you the reason here. Because if we join a small channel here, okay, right over here, so according to this structure, we can still observe overbought, right? This is, we can still observe overbought and then we can go down, right? So this is our first entry. What do we notice here? What do we notice here? Effort versus no results. Do you notice? Do you notice? Now, wherever you can draw the channel, start drawing the channel, because after this, as we observe the falling through ice, the price makes higher lows. Can you see higher low one, higher low two? So you can easily draw the structure here, right? A channel here.
Yeah.
Right?
Yeah.
And now we know that if we take a trade right over here, the price can still shoot up, just a common sense, and then it can make overbought and then comes down, right? So rather than taking entry here, we would prefer to take an entry right over here. So we can take a sell trade, okay? Just a short of sell trade. Our stop loss would be the previous structural high. The previous structural high was this one, right? This is previous structural high. So we move our stop loss to here, okay? And now we can place our stop loss to 2R. That's it, finish. In just under 1 bar, you finish your trade. Got it?
Okay.
Got it?
Yeah.
Now, as we notice this one over here, what do we notice here? A spring pattern here with a very huge volume, right? Now, can you say one thing? Okay, once if we enter a buy trade here, what is our bias? Can you tell me what is our bias?
Bullish.
Bullish bias, right? No, our bias is actually bearish, right? See, a bias is bearish. Okay, a very short-term bias would be bullish, right? So if we take place a trade here, where would you exit? Our stop loss would be here. Our exit would be here at this reference point too. But do you think you should take this trade or not?
No.
I will not take, because the reward to risk ratio here, the distance between the entry and the exit is only 1.4. We need at least 2 to take a trade. So I will discard the trade. Got it? And then we get an opportunity where we call this as UT, upthrust. Am I right? This is UT. See, buying climax, AR, secondary test, FTI. Okay. Then RBI, and after this one, UT, upthrust. Now at this upthrust, what do we notice here? Effort versus no result, right? You see a huge volume here, right? We can take a short trade here. This is at this reference point. And where would be a stop loss? Our last high was this one. So this is our highest high, right? So we can just place above it. And how about our SL? Our this one? Our last major line. Where is our last major line? This is our last, this reference point. And we also have this major line over here. Can you see the last lower high? Can you see? And now we can drag all the way down to this one. This is our safest, because now we can take this big trade because we are already in the distribution phase. So we know the price would go down. So So you can exit, you would say, okay, I can exit here 2.14. Yeah, that's correct. But still, what do I say? This is a last line of support, right? This is a support, the last major support. So we can drag all the way here. Got it?
Yeah.
And now,
Okay.
once we break this line here, what do we notice here? This one. Okay, this is a very rough. There is no lower high, no second high. We are not noticing anything, right? Just a very simple structure. Now you compare this one pullback. You compare this pullback and compare with this one. Can you see the difference?
Yeah.
When you see this kind of pullback, always remember to draw a channel, a small channel, because this will give you a precise entry. Got it?
Yeah. Okay.
Okay. Now, if you want to take one more precise entry opportunity, now this is a low, and this is the first higher low. This is second higher low after. So you can make another channel like this. Am I right? And you will see that this UT comes exactly as an overbought of this mini channel and also an UT of this major distribution. Got it? So if we have this kind of situation where we have two kinds of condition matching together, okay, like we have UT from this distribution and we have this overbought plus overbought and minor, you can say overbought and what to say, yeah, overbought and buying clamors, right? Got it? Three characteristics. Because we have UT from this structure, we have overbought from this structure. Am I right? So this major point, this point is known as confluence. What do we call it as? A confluence is an area where you have more than one reference points. The first reference comes from this line, which is which is this buying climax line of supply. The second reference point comes from here, this oversold line, this overbought line. Got it? Do you understand?
Yep. Okay.
Okay. All right. So let's go for another one structure. Now here. Now, this area is completed and you want to draw another one, right? So first higher low was measured from where? This was our major high, right? From this one, this low, this low, this low, right?
Yeah.
Okay, now this is what? Let me put my phone on silent. Okay. So this is, this is oversold, right? This whole cycle, this is oversold or not? This is not oversold because the price did not return back to the trading range. It just came here and then rejected back. This is oversold. No, this is not oversold. Why? The price went up, reject, and then came down. This is oversold. Yes, this is oversold. Got it?
Yep.
The actual oversold came right over here at this point.
Must close inside the range. Yeah.
Sorry?
It's considered oversold after it closed inside the range.
Yeah, inside this channel, inside this down channel. Only then this is known as oversold. Otherwise, we will not consider it as a oversold. So this is, of course, and you can see the volume here. A very huge volume. You can also see the volume. See the volume, right? So volume can give you a clear indication whether it's oversold or not. And it has to close. So two confirmation. Number one, it has to close inside the range, this channel. Number two, the volume. The volume should shoot up, a very huge volume. Got it? And now if we draw the channel here, because this was oversold. Okay. And where is AR? This is, of course, this is oversold. Then this is AR, right? AR. This is AR. This is oversold plus selling climax. Okay. This one is secondary test. ST, secondary test. Right. Now, secondary test has which quality? Can you tell me what is the quality of secondary test? Higher, low. Am I right?
Yeah.
And I told you one thing, whenever you see higher, low, what would you see? You would draw a mini line from higher, low and extend it. Okay. All right. So this is our first point here. Got it? So where would be our line of reference? Where could we place our trade? This is what?
JC.
JAC. Okay. JAC is achieved. Right. All right. Now after JAC, the price we wait for the price to come back and react to this. This is the first reference point. But did you see any sign like effort versus no result or no demand on this point? Can you see? I cannot see any kind of like no demand or effort versus no result. Can you see? No, right? So we will not take this entry. About this one here? No, not much change here. So we extend these two. So we have two reference points. Number first reference point is this one. Okay, number first reference point is this one. This first reference point. Second reference point, third reference point. Got it? How about this one? Did you see anything here? Here? No. How about this one? Yes, here we saw no demand. Can you see? And it came right on the reference point, this reference point, right? So we're gonna just place our trade. This is the last low. We go for 2 hour. Simple, last high. It's 3.75%. Got it?
Okay.
Right? And now, as we go through here, we can easily see that we have this one line, right? And this is what? Another reference point. And you can see the volume here. Both bars, this bar is smaller than this bar, right? The range of the bar. But see the volume is equal. So this is effort versus no result. Am I right?
Yes.
So we can take a very short trade, although our bias is bullish, but we can take a short trade for a very short term outcome, right? So our stop loss would be the last high here. This is our take profit. So that's another trade. Trade number 2. Trade number 3 comes at this point. You see the second reference point here. And what do we see here?
Spring.
No demand. Sorry, no supply. Right? So it will, our stop loss would be placed right here. How about our target? The last high, 2.82. Understand?
Okay.
Do you understand?
Yeah.
Okay. And if we just combine this structure here, where did you notice the higher high, the higher low here? This higher low here, higher low. If we start combining these two highs, this and this, let me remove this one here. Now we have played this trade, so I will remove it. Okay. So that you're not confused here. If we join this high, because this is our high, this is a low, and this is a higher low, right? So we will draw a channel as from here to here, joining these two, and we can draw the channel like this. Now, what do we see here? What do we see here? Huge overbought, which was completed when? When was it completed? This overbought was completed right over here, right? This is overbought.
Yeah.
Right?
Correct.
So we can call it as overbought plus buying climax. Okay. How about our automatic reaction? Automatic reaction, because this is not overbought. Why? Because the price did not close inside. It rejected, went up. This is not overbought. Now here at this point, this is overbought. Got it?
Yeah.
Do you understand, right?
Yes.
Okay.
Okay.
So our overbought was actually completed at this point. this third point. So we call it as this whole area, we call it as overbought plus buying climax. And now this one is what? When we came down, it came down here. This is the last point, and the price started rising here again. So this is what? AR. Okay, this is what? Secondary test. And secondary test has what quality? Can you tell me the quality of second test?
This is lower high.
Lower high. Good. And as I told you, when we have lower high, what do? We draw another small reference line here. And we can make it as dotted line. Okay, and now we can trade. So this is what? UT, am I right? And at this UT, what do you notice here? Right at the UT.
Nick,
Yeah.
ST and AR shares the same
Sorry?
line, is it?
Sorry?
ST and AR.
ST and AR.
Yes.
Yes, they are in the
Yeah,
same
yeah.
line. Yes, correct.
They're on the same bar lah.
Yeah, same bar. Because this was the
Okay.
actual highest high here. Got it? Even if you draw here, it's okay. You can also draw from here. It doesn't really matter. Okay.
Okay.
So if you draw
so-
from here, it's also all right. It's all right. Okay. So UT, and what do we observe here? Can you tell me at UT? No demand. Am I right?
Yep.
No demand at UT. You can see here. And now we can take our trade confidently. Right over here. Where is the last high? Can you tell me where is the last high? This is the last high, right? Before this point, this is the last high, last structural high. So this would be our what? This will be our stop loss. Got it? Just few points above this line. A stop loss and take profit target, obviously this reference point. So how much was it? 3.6 R. Got it?
Yes.
Yeah, and now if you draw it like this, right? Okay. Now you notice one more thing where if we are like, in this phase, we notice one more thing here. The price is making higher lows consistently on this channel, right? You can also draw the channel like this because this after this high, this is the first higher low, lower high, right? So we can draw the channel here. Do you understand?
Yes.
And now if you draw the channel right over here, now we break this channel from here. Okay. Did we return back? We did not return back. The price does not have any characteristic. Do you see sudden acceleration, something like that? It's very even acceleration. Nothing is changed over here. And the price came back here and price returned back to this reference line. Now, if here, the price made the first attempt and then came down. Okay. So after this, we can also draw another small reference line. Now, what do we see here for this reference line? Effort versus no result. Am I right? And it's upthrust. Upthrust plus effort versus no result. So we can, our last low was our last high. And where would be a take profit target? You can just take it like at this point. My last major target here was this one. Or you can also go all the way right over here. Okay. But I would go for the safest one like here, this one. So that's okay. So leave it here, 2R. Got it?
Yes.
Okay. All right. And now, and that's all. Okay. And now as you draw here, the major channel, as I told you, if you draw the channel right over here, joining these two one. Okay. And now the price did not break the price. We did not have any kind of characteristic. We still moved down, right? This is the last major low which will be retested. So the point is, we can draw the price rejected here and then price kept on moving down. So we can draw another channel from here to here. And now what do we observe? Overbought, return back to this one, right? Huge volume, right? Can you see? Now see the volume here. See the volume here. There's nothing much. Yeah, there is a volume here, but it's already coming down, right? There's nothing much. But if you see this one here, the price has low volume here, but suddenly when it breaks this channel, we have a huge volume. So we can say that this is actually jump across the creek. Am I right?
Yes.
Right. And the jump across the creek was occurred right over here. All right. And now once we have achieved the jump across the creek, where would be a reference line? It make a first low. There is no reference point. Now you see moving average here. Moving average. This moving average. What do we notice on this moving average? Effort versus no result. Yes. This is our point of trade. Stop loss would be just last low. Last. Got it? First trade. And we can also draw another line from here and go for another trade. You see, what do you see here? F versus no result. Got it? How about our last low? Our last low was this one. This one was our last low. Last low. So our last major low was this is our last low. So we can place our stop loss right over here. This one. That's it. And how about our target? Our safest target would be this one. Okay. Got it?
Yep.
Okay. Now, as the price goes up here, we can draw, because after this, the first higher major low was this one and this one, right? These two were the higher lows after this low, right? This low and this low. So if we draw this line and this line from here, extending it to the left, okay, we can just join it. What do you observe here? Same thing. Buying climax. Right?
Yep.
Right? So this is a buying climax here. And the price returned down. So we can just make our trade right over here. Buying climax, oversold. And then obviously this is a little bit here, right? But later on, the price would come back when the market reopens. The price will go back here and then shoot back to this level. First test this level and then test this level. And finally, if the price breaks, the price will further go down all the way down to this, because on the 5-minute time frame, it's a very major distribution. So this price will ultimately test it and go down, test it, go down, got it to this level. Got it?
Yep.
Because if we zoom out this chart, if we draw this one, you will understand that this is a major distribution. Okay, let's suppose we are here. And what do we see here? Shortening of the thrust. Can you see? It's a major distribution here on a larger time frame. Do you understand?
Yeah.
Now let's go to another one, XAU USD. This one is easy. A first major low, high, a first major high. Let's suppose if you draw the structure like this one. There is nothing much, there's no change here. So no sudden acceleration, the price returned back. Is this oversold? It
Yes.
seems like oversold because it is returned back the channel, but see the spreads here. If you see the spreads here, there is no sudden acceleration. Can you see sudden acceleration? No. How about this one? Yes, you see that sudden acceleration. Got it? So if we see this situation, we can also join from here to here, the second channel. We can draw from here to here. You see? Acceleration here. And now what do we see here after this sudden acceleration? The price breaks down, goes up. Did we get an opportunity? Yes, this is oversold. After oversold, what do we notice here? You see? Oversold. And after oversold, if this is oversold in buying climax, this is AR, right? Then the point is why this is not oversold, this one. This is my question. Can you tell me?
No acceleration.
There is no sudden acceleration, very steady volume. No, I mean, change in volume is very, like spread is increasing, this is increasing. It's a very normal thing, right? No change at all. But here you see sudden acceleration here. You see the bars become bigger and bigger as you go down and then rejects it in. sharp reversal. This is AR. Okay, if this is AR, this is buying climax, then where would be a secondary test? This one is secondary test, right? And secondary test has what quality? Higher low, higher low, right? Am I right? This one here.
Yeah.
And if this higher low, I told you, you can make another channel here. And now we can print out the opportunity. See the price breakdown, shake out, and then reverse here. A first opportunity to trade. This one here, go up this side, 2R. Second opportunity comes right over here, this point. See this point? A kind of what? Can you tell me? No demand. Sorry, no supply. And we can go up. Got it? But the point is you have to see whether we can achieve 2R or not. Yes. Got it?
Why is it no supply?
Sorry? This one?
Why is it no supply? Yeah.
This one. See here volume. This volume is lower than this volume and this volume.
Okay.
And you see where the bar is closing on the mid. Right?
Okay.
Yeah. And now we can take further trades. Got it? So you know the trades here. Now at this point, when this was not actually, let's suppose at this point, you know that this was not oversold here. Okay, the price failed here. So what do we notice here at this point? So these are the reference point. Okay, reference point 1. So far only one reference point. And here this channel is also a reference point here. So if we just go for this trade, like right over here, the thing is we extend it. The thing is we need to see if we have do we have to we have 1.61 hour, so we cannot take this trade. Very low reward to risk ratio. Got it? Okay. Now here as well, a very simple rule. I can easily see shortening of the thrust, SOT, right? If you draw the channel here, this is SOT. Am I right? SOT. First touch, second touch, third touch, SOT. And now what do we see? We make another. What is this?
Yes.
This is buying climax plus. Okay, I need to start this again. Okay, so I will start it again. Hold on.